Hey guys, Stock Saturday, and it's a fairly rough week for me. Doesn't seem to be for the market, but that's sort of gold and silver and crypto sort of not doing particularly well, amongst sort of a few other things struggling a little. Some of my sort of base metal miners are down a little. Some of the tech stuff is sort of slightly down, but nothing too much there. It is mainly the crypto side. So I'm down about 7%, 23,000. I have deposited 4,000 into the interactive brokers side, but I sort of deduct that out of the portfolio when sort of mentioning my returns. Appreciate I am sort of fairly degenning into the interactive brokers side now. Sort of where all of my money's been going pretty much for the last at least few months, and I'm sort of potentially looking to put more there with some of this cash here. I've got the 3,000 from the Vale sale, and potentially eyeing up some of the others as well. Sort of Rio Tinto has been holding up remarkably well, considering iron ore is sort of at multi-year lows. They are sort of largely iron ore and some copper and aluminium, both of which sort of aren't exactly blowing the doors off at the moment. So yeah, sort of 4,000 in sort of Rio Tinto at the moment, and sort of Glencore at 3,500 is looking sort of somewhat tempting for what I think is going to be a fairly strong sort of next year and a half, basically. So yeah, some stuff is on the sell pile potentially. So compared to the markets, as I say, it's sort of been largely flat. The S&P is up 0.15% for the week, so that's pretty flat. And the Nasdaq is up today, but down 0.53% on the week. So yeah, I'm sort of drastically underperforming both of those, but that is the way my portfolio goes. So looking at some news, we've got monthly production data from KGHM, my sort of new one of my new favourite miners. Sort of fairly steady production from them. 61,000 tons of copper, which is pretty good. Up sort of, they show like the year-to-date totals, so January to July is 419,000 compared to 408 last year. So pretty good. Silver for the month, 114,000. 114 tons compared to last year. July was particularly good, and again the sort of year-to-date figure is slightly down on previous year, but it's still a decent number. I didn't cover the monthly revenue data from TSMC either. That came out a couple of weeks ago, I think, and it was all-time high on revenue, 256 billion new Taiwan dollars, up 44.7%. So TSMC sort of management saying this year was going to be a steady year of, nothing too much in the way of growth. Doesn't seem to be playing out. It's AI boom, presumably. I don't think this is going to be sort of Apple and people like that in sort of July time. I expect this is just Nvidia and AMD and the like sort of rocketing those orders up. So yeah, a great number. I did sort of think this was maybe playing into guidance for Nvidia. They released their earnings, sort of beat expectations, but it seems not by enough, and they've sort of dropped slightly on the news. But yeah, I thought that was sort of presumably a strong sign for them and a good sign for TSMC, all-time high revenue. So diving into Tencent, I don't sort of hold Tencent directly. I hold Prosus, but it is sort of essentially Tencent plus a basket of crap from emerging markets largely. Sort of almost seems to be a discount to the market cap for those, and Tencent is largely sort of the whole market cap. But yeah, some of their other stuff looks, like it has potential in the years to come at least. But the Tencent side looking pretty good. Revenue up year on year, 8%, 1% up on last quarter. Last quarter was pretty good. So yeah, the sort of social network side was slightly down on last quarter. Domestic games up slightly, international games up 2%. Advertising up 13%, which is good. Fintech down slightly, and then others, is a very, very small amount anyway, but that was down slightly. Year on year, it looks considerably better, but last year was sort of, second quarter last year, they were having a little bit of a rough time, so everything's up quite a bit more year on year. 9% in both domestic and international games, 19% in online advertising, and the fintech side, which is down sort of on last quarter, is up 4% year on year. And this does sort of reflect into the profit figures as well. Profits sort of down ever so slightly. Net profit is up from last quarter, but that is sort of some accounting changes and nonsense. But over last year, considerably better as well. So yeah, looking good. Operating profit is probably the one to sort of keep an eye on more there. You don't have the sort of tax issues and sort of write-downs and various things. So some of their subscription services have been looking pretty solid. The social network side up 2%, but the sort of mini programs and mini games on there have been pretty strong. Video side as well. Long form video subscription revenue increased 12% year on year, which is nice. Music subscription revenue increased 29%, supported by growth in subscriptions and average revenue per user. So each user sort of spending a little bit more. I haven't really looked. That could be sort of more the Spotify free with ads model. Not really sure whether people are sort of doing the £10 a month, Apple Music, Spotify Premium type subscriptions, but yeah, 29% year on year, although it's not a massive focus of Tencent, the music subscriptions, but I think it's 117 million, they said, subscribers. So yeah, not too bad. Domestic games up 9% year on year. They sort of go into that a little bit more down here. Peacekeeper Elite. Haven't really seen much of that. But a Naruto game, sort of fairly popular series, 10 million users in May, pretty good. And new releases, a Need for Speed game, and DNF Mobile, sort of one of the China favourites. International games as well, looking pretty strong. PUBG Mobile, they added mechs from the looks of it. Bit of a sort of interesting switch. Never really thought they were going to be going that route. Always seemed to be just a first-person shooter. Valorant as well, doing quite well. New maps and stuff. That's the competitor to Overwatch, from what I understand. Brawl Stars, third highest ranked daily active users of worldwide mobile games. So that's pretty strong. And Squad Busters, casual action game from Supercell, who they acquired. So pretty good. Worth noting they are on the buyback train with a lot of other Chinese companies as well. They're not exactly hammering it. They never really have a huge amount of cash on hand, and yeah, it just doesn't seem to be the way they want to go. But they're certainly doing a bit. Shares outstanding down 1.9% year on year, and 0.4% on previous quarter. So yeah, they're doing a little bit of buybacks, not too bad, and margins sort of looking fairly strong. Fintech and business services just continues to increase in margin. Advertising obviously has done well sort of over the past couple of years and has sort of plateaued somewhat. But yeah, overall gross margin sort of ticking up 53.3% now, where it's sort of always in the mid to low 40s. Just speaking of the cash as well, they are sort of not running quite as lean as they were before. You look sort of this quarter last year, they were at 371 billion RMB compared to in cash compared to 354 billion in debt. So they're nothing at all like Baidu and Alibaba, people like that, JD.com, sort of running massive net cash positions, but they have a little bit. So last quarter that went to 92 billion RMB net cash. It's dropped back slightly to 71 billion, but still a reasonable amount. And as they're sort of noting, they've repurchased 104 million shares and paid a cash dividend. So they're sort of returning to shareholders. And yeah, that is sort of pretty much it. And economic news wise, there wasn't all that much this week. You had sort of some important bits early in the week. Durable goods orders, people sort of pay a bit of attention to. That's all over the place though. Down 6.9% last month and then up almost 10% this month. A bit more than expected. Thursday, you sort of had jobless claims ever so slightly better than expected, but I think people were maybe thinking that was going to be sort of quite a bit worse than the estimates. So yeah, people are backing off the sort of huge recession caused by the or expectations of a recession from sort of poor data coming out recently. And then you had European provisional inflation, sort of pretty much on target, slightly down from previous month as well, and US PCE and core PCE sort of pretty much on target to slightly down on the yearly, or down from expectations at least, and it was exactly the same as last month. So yeah, the soft landing, is sort of back on the cards. So as I say, portfolio-wise, it continue to get sort of weak prices on the crypto side. CleanSpark at $10.69. We double that at one point, sort of earlier in the year. Kur mining sort of still above $6. I'm pretty happy with that. Riot platforms again similar to CleanSpark, really sort of at recent lows. $7.50. Equinox still looking pretty good. Fortuna sort of underperforming. And American Tower and Vici are sort of doing reasonably well with the rate cut expectations, and are sort of maybe somewhat on the sell pile, to sort of possibly go into something like Hive Digital or Riot potentially. And Interactive Brokers, Pan American sort of still hovering around 20, 21. KGHM sort of hasn't really moved since last week. And the invest side, again, got to admit, Baidu and Alibaba as sort of potential sells. So sort of nice round. I do like the sort of £4,000 deposit amount for adding to my option side, which hasn't been doing at all well in the last week. I added sort of 4,000 and have put nearly all of that in the last week, mostly into Hive and Riot blockchain. Nothing really else. Equinox Gold sort of is already an incredibly large position, so I thought I would be adding elsewhere. But yeah, Equinox and Kur have come down slightly. Hive and Riot have come down quite a lot. They're below where they were last week, despite me adding sort of a good couple of thousand into each of those. And then HiMax sort of hasn't really gone anywhere. It's up a couple £100. Core Scientific down slightly, and Fortuna down slightly. So yeah, basically the thesis is still global liquidity increasing, sort of rates in US and all over the world decreasing over the next year, barring a sort of extremely severe recession. I think we should be looking pretty good for crypto, gold, and all sorts, really. I think if we get a sort of slowing economy with rate cuts and probably stimulus because of the slow growth, then a lot of people are sort of saying that is perfect for risk on assets. So we'll have to see what we get for sort of the next 18 months. So leave your thoughts in comments below if you guys are buying anything particular, or sort of excited about anything, or selling anything. And like and subscribe. See you soon.